Hello guys, hello everyone. I hope you're doing great. Here it's a video for the updates about the markets. It's been a while to post the video because we are trying to change a little bit the structure that we operate here at MarketMindsMastery. So for those who are subscribers and of course free members of our Telegram channel, you definitely get the updates. For those who are new and perhaps you don't know about the Telegram channel, please find us on Telegram, as you can see at the frame under Market Minds underscore mastery. So let's start with the Australian dollar, US dollar. Here we are on the 4-hour time frame. The separators here, they just help us to understand which day is the trading activity occurs. Let's bring the drawing tool. Just give me one sec. So here we are. Now, at this area here, as per the analysis we post every single week on our channels, we were expecting the price to stop on the 4-hour time frame. I'm not going to do the analysis we post on the channels because it's there and you can read it, but what I'm here to do right now is market updates and to prepare ourselves for tomorrow, of course. Now the markets are about to close, slow activity, and the liquidity is drying up, to be honest. So at this point, at the 4-hour time frame here on the Australian dollar, US dollar, we were expected to see some kind of reaction here, and to be honest, to see the price making a lower low and lower high. But where? Actually on the lower time frames, and I prefer the 30-minute chart for this type of setups, like to find where the price, we wait first the price to reach at the area of resistance, and then to go on from the 4-hour or daily chart, and to go on a 30-minute chart to define an entry. So if we look at the price from this point, the market made a higher high, and here it was the first place I was looking to go short, to be honest. But why I didn't go short here, it's because the low, it was down here, it wasn't right there, because that's not a swing low. And for those who gonna really, they don't understand why this is not a swing low, it's worth to just zoom in a little bit. Do you see this one here, guys? What is the definition of a swing low? The definition of a swing low, it's this low here to be lower than the low before and the low after it. But that's the first part. The second part is this candle here cannot be an inside candle. It has to take the high of the previous candle. Now, it's a rule that we follow, and if we decide that we want to follow the rules, then we have to trade based on the rules. Okay, so, and I'm very strict with my rules in trading, because if you are not strict with your rules in trading, then why do you need the rules? You just do 100% discretionary trading. Okay, we put some kind of discretion in our trading, but that's not the case all the time. So we'll continue. The price reached at this area. We were looking to short. I didn't go short immediately, and I didn't short it at all because I marked my low here. The price didn't really close under this low, so it was just a false breakout. The market then bounced off, it moved upward, experienced some kind of reaction here, decline, but that wasn't enough at all to initiate short positions. Then the market broke to the upside. So after that, we understand that we have to go back to the 4-hour time frame and understand where is the next area, where is the next order block, or what happened here to, let's say, there, and we have this fair value price. Now remember, there are many courses out there and many educators and indicators and whatever they call it, fair value gap. But to be honest, there is no gap in price. The gap is where there is a gap, where there is a gray area, there is no activity happen. Here, why it's not a gap? It's because there is enormous amount of buy and sell orders occur for these bearish candles to form. So if you still have questions about that, please send me a message and I will personally write you a detailed explanation about that. So back to the chart, the price breaks above this high, closes above it. We go on the 30-minute time frame, and now for some traders, this one here becomes the new area to initiate long positions. Okay, not to go short. On the 30-minute time frame, there is this fair value price level, and the price decline. There are traders and they like to use the Fibonacci retracements. I use Fibonacci retracements to find the retracement, but also the Gartley patterns. I love them because they based on Fibonacci numbers and they are exclusively made by numbers. So it's either you see that number or you don't see the number. Okay, so that was an interesting thing and I would like to mention. So some long positions initiate from this point here with the buy limit orders. The price moved to the upside. Now, of course, all stop loss must be tracked to break even if not taking money from the table. And we do expect the price to continue its upward move and reach at least the middle of this bearish Marubozu candle. So from tomorrow onwards, I still look for long positions on the Australian dollar, US dollar. Next one, it's the Euro US dollar. The price consolidate here. To be fair, it hit it the 50% Fibonacci retracement. It didn't make any lower highs and lower lows. Even if we go down to the 30-minute chart, what we see is that the price false break or make equal bottom here, and then it broke to the upside at the 50% and then moved downward. So that was the low, that was the high, and during the news events the price moved to the upside, enter into this bearish order block and decline. Up to here was the room of opportunity, of course. Oh, sorry for that. And the price bounced from the support 1.06768 and it moved upward. Now it's in the middle of this area. So price clearly is ranging and we don't know what's going to happen, of course. But again, the Australian dollar, it's against the US dollar, it shows more clarity at the end of the day. Next one, Great British Pound against the US dollar. The price started from this low here, create higher highs and higher lows. It was a 4-hour bearish engulfing order block identified at this point. The market didn't do actually anything on the 30-minute chart. So today we look from this line to the right. Market opened there. Now it's here. So at this point it made the higher high, but it didn't make, so that was the low. False break here, make one low, bearish engulfing, false break. So either people who took that trade would have been in a losing trade or would have just put the stop loss to break even. And it's something, guys, that I see traders, they do all the time. They just set and forget the trade, which from the one point of view is okay, it's acceptable, but that's at the early stage and beginning of the trader, because the markets, once they print, let's say, this price action reversal here, they don't pause their activity and stay there waiting for the traders to decide, am I going to short here, or am I going to go long, or am I going to just stay aside? And then the price, after 30 minutes, the price declines. Then what? The trader needs to take decisions. You can't go in the long run with the rule of set and forget. You need to actively manage each and every trade, because you don't know what's going to happen next. And because we are trading with probabilities, we must first ensure that we manage not the outcome of the trade, but the risk we take on the trade. So a trader who sees this picture here first has to give credit that in the short term the market is ranging, and as the price approaches this support, you can't be on that side like most traders they are, to hope that the support will break. Yes, at some point support will break, resistance will break like this, but you can't stay there and hope. You have to trade what you see, and other opportunities, they're gonna arise, they're gonna appear, because the markets are in a constant motion. So what can we look from tomorrow? It's like we see that the price experienced buying pressure at the beginning and at the end of the session, with some kind of sideways minimum trading activity during the mid of the session. So we do really expect the price to continue move upwards. If a retracement occurs somewhere around 25,412, to see the price really move to the upside. So that's what I will be looking for the Great British Pound tomorrow. USDJPY, all the JPY pairs, they decline a lot, bearish and engulfing on the daily chart. So it's going to be easier to see them on the daily chart. Or the move, if you measure this high to this low here, it's about 560 pips. It's an enormous amount. It's maybe at least 2.5 times the ATR of the weekly chart. So within a week, this currency pair trades around, let's say, 200 pips, give it or take, 250. In one day, 560. And I believe if we check the Great British Pound, Japanese yen, it's going to be even more, because it has more volatility here, 700 pips. So it's insane. So what do we expect from this one here? Well, price is in an uptrend. I'm looking to buy. Some traders, they have this feeling, oh my god, it's a bearish engulfing, what we're gonna do? If we're gonna buy on a bearish engulfing, we don't buy on a bearish engulfing, we just buy in an uptrend. Okay, but again, it's not that technically correct right now to look for buying positions. Okay, just saying. Next one, let's check the USD Canadian dollar. This is a good one, to be honest. I like it because market makes higher highs, yeah, higher lows all the way. Price shows like a textbook example. If the sellers, and that's how you have to think in trading, guys. If the sell orders, not the sellers, excuse me, if the sell orders, they were significantly more than the buying orders, so all these bearish candles, they should have continued and the price should have moved lower. But this didn't happen. What on the contrary, what do we see? It's the price stopped here for a couple of daily sessions, consolidate, so we might gonna see push to the upside from tomorrow. And there is a nice way I like to play these moves. I like to take them with potential bullish engulfing candles. So tomorrow, let's say if the market opens here, price will trade at some point, takes out the low. I like to place a buy order here for the price to move to the upside. Okay, so next one, USD Swiss price is what I like to call sandwich here. It's like the slice of bread and cheese in the middle. Yeah, of course it's gonna be better if it's in the toaster, right? So bearish engulfing from this area of resistance on the 4-hour time frame looks like this. Much of weakness, RSI every time, try to get it accurately, every time the price makes equal highs, the RSI put lower highs. So that's a strong sign actually about market weakness. Here are my lines, the S1 support, the S2 support, that's a weekly low. I used also Bollinger Bands for this one because the market is sideways. What I would like to see is the price to create this kind of structure. Actually, it created this kind of structure on the 30-minute chart. Make a lower low, false break, but don't be surprised to see the price comes and fill up this gap here, guys. Okay, so let's see what's going to happen. It looks like a bit promising here. If the price is going to move to the upside, enter into this area here between 0.912 and 0.913. Perhaps some reversal price action, and we are good to go short. Next one, Great British Pound, then the Japanese yen. The price during the London Open enter into this 4-hour order block. It also false break the S1 support. That what we marked and send it out on our channels. So if I have the opportunity, I will show you. So it's let me bring it. It's this one here. So at the beginning of the week, we send out our analysis, and we pointed that this 4-hour bullish engulfing order block, it has significance because it's just above the S1 support around 194. Also, this has to support here based on this breakout. The upward trend line, of course, that's very important. And the market actually today enter into this area and yeah, bounce to the upside. Now, why I didn't take and I didn't send any setups today, it's because the distance of this candle was 130 pips, 100 and yeah, exactly 31. So a stop loss of 130 pips is not, and especially that's on a 30-minute time frame, that's not a favorable based on the average range of this currency pair, because this one on a normal session, let's measure on a normal, during a normal session, this currency pair moves around, let's say 40 to 60 pips on the 30-minute time frame, 40 to 60 pips, and this one here, it moved 130 pips. So if you decide to put a stop loss around 130 pips, then you're gonna need too many days, in my opinion, to reach at least 2 to 1 or more. So it was, the reward to risk wasn't favorable for this particular one. Next one, eurojpy, exactly similar, same, however you name it. The price false break the previous Friday's high, false break the previous Friday's low. and it's going back to an area of comfortability or back to the mean, and from that point we'll see what's going to happen. The important thing is that this market is in an uptrend, and traders, they falsely are focusing on the one single price action, and they ignore the momentum that it's on the upside. Okay, this scenario, yeah, now we are examining the daily chart, but this it's the same and appears in all time frames, from the 1 second chart, 1 minute chart, to 5 minute chart, to 4 hours, daily, monthly, weekly charts, everywhere. It just take different amount of time for this price to develop. That's all. Next one, US oil on the daily chart. The price from this point here declined today. The price action was extremely favorable for some short positions. If we go on the 4-hour time frame, it looks like this. Now, some traders, again, they lack the understanding of reading the prices, and they see this one here and they say, okay, the market is in an uptrend, but the reality is that this low defined by this high here, and then we had this higher high, and this low here that defines by this high is not a valid, neither one in the market. Why? Because this one here, this low didn't change the market structure. It didn't create a lower low based on this low here. So we cannot take this as a swing in the market. Okay, guys, I'm talking as a certified financial technical analyst, as a certified market technician. I know how to draw and read the charts and the swings, and what you might learn, what you might read about buy side liquidity, low side liquidity, and all this stuff. They were exceptionally well. Don't get me wrong. It's just the most important thing to understand is how to read the swings in the market and the exact definition of what a swing high and a swing low is. Okay, so you can validate all my words and all my sayings by going back to the sources, in books that they wrote about this stuff way before people become YouTubers. Okay, so just keep that in mind. So my mission here and my purpose is to bring out pure information from the source, and that's all. Okay, simple as that. So this low here and this high here are the relevant, unless one of these two breaks, either to the downside or to the upside, there is no such a swing trade to be made. Okay, only scalping using price action setups, lower time frames. So for this one now, I'm pretty neutral, because the market is very weak. If we, let's say, use these swings here, which they are not held for a position trading, the price retraced almost all the way down here. So for traders, they want to go long, this might gonna be a favorable opportunity. For traders, they are looking to go short, well, good luck. Here it's a support. Okay, I'm not saying support they don't break. I'm just saying that if we have a rule not to sell the support, then why to do it sometimes only? Next one is the gold, and let's check the daily chart. The price, I would really like to see the price to move away from this support once it bounced off. The price really printed this bullish engulfing, and Friday and Monday it just goes nowhere, absolutely nowhere. Okay, so it looks like there is a lack of buying orders to push the price higher. There are buying orders, but they are not, it looks like they are not significant in amount to overcome the sell orders, so the price will move upwards. Next one, let's check the S&P 500, one of my favorite indices. So at this high here, the price, let's see on the 4-hour chart, the price, I was expected actually the price to retrace prior to the New York session. So we find some 30-minute entries here at the New York session, during the New York session, to go long, but the market really didn't. I couldn't take any trades here, uh, purely sideways, and yeah, nothing to do with this one. So what I will be looking to do, and how I would like to play it, is to wait to see what's going to happen during the uh, Asian session and London session, and during the New York session to go on the lower time frames and trying to find some entries. Okay, this is one of my strategies, how I intraday the indices. Okay, and again, some people, they try to trade the S&P 500 during the London session and the Nasdaq during the London session. I'm not saying that they don't move during these sessions, guys, the US indices. What I'm saying is that there is a higher chance to see more robust moves and more well-defined moves during the New York trading session. Okay, if you have any different opinion, please add it on the comment below. I'm happy to um, understand how you may think about the markets, and we can discuss, of course. And last one, let's check the Bitcoin. The heavy Bitcoin, and actually I did a post on LinkedIn and on social media about the halving, so you can go back and you can go and read if you want. So on the daily chart, the price is at this previous week's low. Today it looks like it falls breaking. There are another, here it says another 3 hours and 12 minutes for the candle to close, although the local time is almost 12 a.m. So let's see what's going to happen. Looks like the sell orders are drying up in volume, and maybe the buy orders will make their appearance. Who knows? Alrighty, guys, I think that's all from me today. That was the market update of what we're gonna focus pretty much for tomorrow. We stretched the time a little bit more because it was a little bit long time since the last time I did a video for your market update. So you are well equipped to trade the Forex market tomorrow based on our analysis here. Of course, on a daily basis, we post analysis on our channels, on Discord, on uh, on Telegram, everywhere. So please join the channels, and anything you want, you can ask. And of course, feel free to send us emails, messages, whatever you want. So I wish to everyone to have a fantastic evening, I would say, unless you are in Australia or in the Asian region. Well, you're gonna have a nice morning. Okay, and I will see you on the next video. Thank you.